Ladies and gentlemen, please welcome Hanan Steinhardt. He is a lawyer, a tech CEO, speaker, and an author with 3 decades of experience in law and technology in Silicon Valley and Israel. He has published 2 books, the latest titled A Brief History of Money, How We Got Here and What's Next. Mr. Steinhardt is a biweekly columnist for Globes, an Israeli leading financial paper where he discusses ongoing monetary developments as well as blockchain, cryptocurrencies, and economics. He is also a GP in a digital assets hedge fund. Hanan, thank you so much for joining us today.
Thank you very much, and thank you for all participants, which obviously I can't see. Nice meeting you. So we will try to talk today about Bitcoin and try to get like a macro view of it. Is it dead or alive? We all know Bitcoin was around 70,000. We all know it was around 16,000, now around 21. So looking forward into 2023 and beyond, what is there for Bitcoin? So first, the structure of what I'll talk, I will try to explain why we personally believe in Bitcoin. It will have 5 different elements to it. The first is the fundamentals, the demographics, the adoption, and down the road we get into some other interesting points like the cycles and obviously what are the signals, when to buy and when to sell in such a very volatile asset. So I think this picture tells the entire story, and this is the entire story of the US economy. By the way, there's no difference between the US to the worldwide economy from that perspective. And as you can see, starting from sometime in the 70s and 80s, basically the top graph is the total liabilities debt of all sectors in the US economy, and the bottom one in blue is the GDP. And you can see that these two are drifting apart further and further. As of the end of 2022, the total debt of the US economy, and I'm not talking only government, but the entire, all sectors of the US economy is something around $95 trillion. And the total GDP is something around 25 trillion. And as you can see, the gap between these two is growing. And it's growing to a degree that really the US, and again, I'm saying US because we are here in the US, but it's not no different in other big economies of the country. Some of them are even in worse shape. The growth in the GDP is not enough even to cover the interest on the debt. And I'm talking about not high interest, but even medium-sized interest. And there's no way to maintain this debt, let alone pay it back, without increasing this debt level constantly. So all this got a special jump in 2020 with the COVID pandemic and so forth. And what happened is that the Fed grew its balance sheet significantly, and it increased what was a bad situation became even worse. So we got into a situation where there is inflation. By the way, the inflation it was clear that it's coming and it wasn't transitory. I wrote about it. You can't increase the money supply by 37% in 2 years versus average of 6% in the decade before, and expect that prices will not be reflected in prices. So now Powell and the Fed is promising to slow down the economy, and this is the quote from Powell from his talk in Stockholm about 2 weeks ago. We'll raise interest to slow the economy. So that is the goal. And frankly, there's no realistic other way to stop inflation. Everybody that lives in the US, you know that prices have skyrocketed. You can see it everywhere. 5%, 7% is not a real increase in cost. Again, it's not part of the discussion how inflation is calculated and why the real cost is not reflected in it. But everyone that does any type of shopping anywhere knows that it's much more than 5%. And the problem for the Fed is that if this inflation will start going into salaries, into income, it will become a cycle that cannot stop. So the only way they can do that is, and as you all probably saw, the last job report, unemployment of 3.5 and growth in the number of new jobs. There's no way that this will not get into the cycle of salaries and then get out of control without slowing down the economy. And that's what they're doing, promising to raise interest rate, promising to reduce their balance sheet and so forth. So on the short term, it's pretty clear what's going to happen. But in the long term, even though the markets don't really believe the Fed on that one, but in reality, in the longer term, who will buy all this debt? And if you can see, for example, the last year, all sectors debt to GDP, Q3 21 to Q3 22, the debt was grew from 86 to 92, almost 9 trillion, almost $6 trillion, while the GDP grew almost a little bit above 2 trillion. So the growth in the GDP, which should cover the interest, doesn't even cover half of the interest on the debt, let alone be able to pay the debt. So the question long term is who will actually buy this debt? And if you look at the debt of the federal government, if the situation or the numbers looks much worse because of ongoing deficits for the coming at least 2 decades from the cost of Social Security and Medicare and the cost of financing interest on the debt. So if we look first at the short term, and we look at the promise of the Federal Reserve, we see that this is like the total assets of the Fed, which basically is the combination of mainly securities, government securities and mortgage-backed securities, about third and two-thirds. I mean, two-thirds for the government federal debt and about third mortgage-backed securities that the Fed has bought. It's important to mention that the concept of growing the federal balance sheet as a way to finance debt, by the way, it's about 23% of the debt that is held by the public is today financed by the Fed. So this is quite a new concept. Until 2008, it hardly happened, almost never. They did it after the 2008 debacle. They liked it, so they never stopped or hardly slowed down. And when came the COVID, it was like, okay, let's just do more of it. And now the Fed, though, at the peak, the Fed was stuck with $8.9 trillion in balance sheet. And now the Fed is promising to reduce its balance sheet about $105 billion a month. So it's about $1.3 trillion a year. But it's really very little has actually happened, about 400 billion since April. And you already see what's going in the markets. And obviously the federal fund rate, which is the basic rate, has grown to about between 4.25 to 4.5, with promises maybe to reach 5, and all the consequence for the prime rate and the mortgage rates and all that you obviously know. And all the combination of these two, meaning the increase of the federal fund rate and interest rate in the market in general, and the reduction in the balance sheet, which means that the Fed is reducing the amount of money, the money supply in the market by not buying new bonds that are reaching maturity, basically slowing down the market. And as I said, this is not only a Fed issue, this is all central banks together at the tops, from $5 trillion in 2007 to 33 trillion in 2021. That was the amount of new money that big central banks, the major central banks in the world have printed. Out of that, from about 19 to 33, so it's about 40% happening just 2.5 years. And now, after seeing the consequence, they are trying to bring it down. So what we're looking at for 2003, and that's important also when we look at Bitcoin, because as I said, the fundamentals, we're looking at 2003 that the central banks, or the Fed in our case, is aggressively trying to stop the inflation. And he says that. So if you don't want to fight the Fed, just listen to what Powell says on that aspect. And what that brought to the market is the mother of all signals. In the last, from 1954 till today, like about 70 something years, there were 9 times of recession in the US. And in all 9 times, the yield curve, an inverse yield curve, happened just before the recession started. By the way, the inverse yield curve happened on average between 6 to 12 months before the recession started, and many times after the inverse ended. And I'll just say one word for those who were not completely familiar what inverse yield curve mean. Basically, in a normal life cycle, the interest on long-term bonds, government bonds, obviously is higher than the interest on short-term government bonds, because long-term has a higher risk than short-term debt. And therefore, for example, a 2-year bond will, let's say, pay 3%, and a 4-year, 10-year will, let's say, pay 4%. That's a normal cycle. So if you take the 10-year and you deduct from it the 2-year, you get a positive number. But when you deduct the interest of the 2-year from the 10-year and you get a negative number, it means that there is a negative spread. It means that the interest that is paid on short-term bonds is higher than the interest that is paid on long-term bonds. And that was the mother of all signals for recession. As I said, there were 9 recessions. In all 9 of them, you can see part of them from 1980, all 9 of them had an inverse yield curve. This phenomenon that I described is called an inverse yield curve. All 9 of them had an inverse yield curve, and there was only one time in 1964 that there was an inverse yield curve, and there was no recession at that year, but there was like a very soft year. So I would say 9.5 out of 10 and 9 out of 9 positive, and false positive there was almost none, hardly one. We are now in an inverse yield curve that is very steep. It's about 75 basis points. It was going up and down, but around between 70 and 77 basis points. This type of inverse yield curve last time was in the 1980s. So I think this talks volume. Now, if you look at something interesting, that's also from a document of the Fed, and you look not only at the inverse yield curve, but you add to it basically asset valuations. This is the red line. So the combination of asset valuation and the spread, which is the long-term minus the short-term, you can see the probability of recession jumps every time that not only then is an inverse yield curve, but there's also very high valuations for different assets. And here you can see that from the perspective of the valuation of the assets, we are now at all-time high, higher than 2000, higher than 2008, and so forth. So the probability of a recession in 2023, to my humble opinion, is very, very high. I don't want to say 100%, but I think it's very close to it. And with a recession comes also obviously a drop in employment, because that obviously is the goal of what they're trying to do. They're trying to slow the economy. They're trying to bring more unemployment, and they're trying to prevent the situation that the increase in prices will roll over into payroll and so forth. And you can see here in the past, again, same thing. You can see the ratio between the inverse yield curve and unemployment rate. Every time the inverse yield curve is negative, which is a black line, you can see following also growth in unemployment. And the correlation between the balance sheet of the assets in the balance sheet of the federal banks and the S&P is very clear. You can see it all the way from 2008 and down also to what happened already in 2022. And as the Fed is promising to decrease his balance sheet and to do QT, I think we will continue to see this direction, even though, as I said, the markets, not so much the bond market, but especially the stock market, like resisting hard this notion. So how does all that to do something with Bitcoin and what we believe in Bitcoin? So what I spoke up till here was trying to cover the fundamental, basically saying that even in the short term, the Fed will create in 2023 some type of recession. Down the road, moving to 24, 25, again, we don't know exactly when on that scale, but the money supply has to increase. There's absolutely no way for this system to continue unless something fundamental will break. Something fundamental will break, I mean, entire big reset in the entire system. There's just too much debt, and that debt cannot bear interest rates of 5 and 6%, any mortgages 7 and 8%, and that debt cannot also bear that there is no growth, constant growth in the money supply in order to pay the interest and also pay the new debt, because overall, after all, we are not only in debt in the past, we also have deficits in the future or in the present. So I think it's very realistic to say that unless something fundamental breaks and there's a big reset, the increase in money supply and government debt will continue. For example, the Congressional Budget Office, in his assessments that they published about 2 months ago, estimated that the government debt, the federal government debt, will grow about twice, from about 105%, debt held by the public, till about 190% of GDP. So there's no real way without this debt growing, and this debt is the money supply. As I said, unless something fundamentally breaks, which also I think both scenarios are positive from the perspective of the Bitcoin. The increase of money supply, which means a decrease in the value of the dollar, and also if something breaks, I think Bitcoin is the only safe haven asset, except for gold, but we'll talk about the comparison in a second, that's available. Number two is the demographics. There was just now a survey by Monthly Fool. 60% of millennials own crypto, more than the number of that own stock. If you think about it, it's quite obvious. Basically, the young people and even Gen Z, even more, they live in cyber world. The future's in cyber world. They do everything in their phone. Cyber type of money is a natural. The adoption. Another point, if you look at the adoption, the level of adoption and the speed of adoption of Bitcoin compared to the adoption of the internet in the early days, and we'll see a graph in a second, you see big similarities. And then the next 2 points, which I won't talk about now, is, okay, so if this Bitcoin is going to happen, how do we avoid these very aggressive cycles and very aggressive volatility we see in the Bitcoin, and how we benefit from that, and what are the signals that tell us, okay, now it's time to sell, and now it's time to buy. So it's very interesting to see that even though gold since 1971 is not a financial asset and is not a monetary asset officially, you can see that about 20% of the gold that was ever mined is held by central banks. You can see that last year, 2022, was almost a record in buying gold. And you can see that in the last decade, central banks bought gold. And if you think this is only like Russia buying gold, no. You can see on the left-hand side that who are the biggest holders of gold: the US, Germany, Italy, France, China, Japan, and so forth and so on. This is a very much a mainstream asset, which begs the question, why do they buy gold if it's not a monetary asset? And we don't have time to answer this question, obviously, but it gives some thought that maybe they are thinking beyond what they're saying. And if you compare Bitcoin to gold, again, we don't have the time to get into it, but you can see that Bitcoin has much more and many more advantages upon gold. For example, its portability, its ability to be divided and so forth. If tomorrow the financial system crashes, the only available way, or if it doesn't crash, it becomes hyperinflation like in Venezuela, the only viable way that exists today to conduct commerce really is Bitcoin, because you cannot really conduct commerce with gold. Bitcoin is available tomorrow in everybody's phone, and Bitcoin is divided to 100 million Satoshis. And theoretically, we can tomorrow start conducting commerce with Bitcoin if something happens to the system as we know it today. Now, we spoke a little bit about demographic. It's interesting, obviously, there's an age gap, huge age gap. If you look at people above, in the US, people above 55, only 5% of them have any ownership of crypto, and most of the ownership are people that are much younger. But also very interesting on the right-hand side is you can see that the people who own crypto, many of them have very high education. First degree, bachelor degree, master's, doctors, doctorate, and you can see that it's not it's a financial asset that is held by the top echelon, not only from the perspective of capability, but also from the perspective of education. This slide is very interesting. It compares the adoption rate of Bitcoin to the adoption rate of the internet in the early years. So you can see here the orange or brown line is the Bitcoin adoption, and the white line is the first 15 years of the internet adoption. And you can see that there is a very similar pattern of adoption. Now we are today, where you can see the arrow, it says we are here. But if we continue to draw the line of adoption and assume that it will continue at the same pace and equivalent to the pace that the internet adoption achieved, it won't be reasonable to think that we will reach 1 billion users. Today we have about 130 million, 1 billion users of crypto in the coming 3 years. And what that will mean to the value of the asset, which is scarce and cannot be printed and is not printed, is, I think, quite clear. And here's another one talking about the different stages in adoption of technologies, innovators, early adopters, majority, and so forth. And again, if Bitcoin will continue in these stages as it has since inception, the numbers can be staggering. And that's also something that is worthwhile mentioning. Look, if I would meet you 13 years ago and I would tell you, look, here's this asset, it is worth now, let's say 30 cents. It will be worth $70,000 in 14 years. And you will ask, how much is the marketing budget? And I will say to you, zero, no marketing budget. And who is the CEO? And I said to you, no, there's no CEO and there's no VP marketing. So how will that miracle happen? You would think I'm like a little crazy. That is the magnitude of what happened with Bitcoin. This is one of the major events, I think, that happened in mankind history. And financial asset that came out from nowhere, that had no marketing budget, that had nobody behind it, that had no management, managed to reach this type of brand recognition and value. I think that says something. What happened in the past, I think, also can say something about the probability of it happening in the future. And now we spoke about Bitcoin and gold. It's worthwhile to look at the different market value of physical gold versus Bitcoin today. It's a little bit above, it's probably 0.4 today. So even if Bitcoin just moves a little bit towards being the new gold, you can understand how much value is potentially kept here and can be unleashed. Now, Bitcoin is very volatile. We know that, and we don't have the time to get into it, and the 4-year cycle, and the reasons and so forth and so on. But you can see that Bitcoin is moving all the time within a certain range. And every time that there is a hype, once in 4 years, it hits the top range. And every time there is a little bit of a depression, it reaches the bottom range. But the direction of the range is quite clear. And I think it is not unreasonable to think that in the next cycle, we will see Bitcoin pass the $100 mark. And I think the cycle afterwards, it can pass much higher numbers. I don't want to say that because they say the numbers because they will almost sound crazy. But I must say that, again, if we would have met when I started buying Bitcoin and I would have told you, hey, it will reach one day $70,000 or $60,000, you would equally think I'm crazy. And I think it's nice. Bitcoin got more and more mainstream in the last 3 years cycle, but it's also nice to finish with a quote of Bill Miller. So sorry. Though the price is volatile, Bitcoin can provide investors with insurance policy against financial disaster. So I think that's one part of the Bitcoin, an insurance policy, but I think the other part of the Bitcoin, I think Bitcoin today, yes, it can go to zero. Things can happen. Governments can outlaw it. A lot of risk exists, but I think beyond 2023, which I think we will see Bitcoin probably still going down. Nobody knows for sure, but it's realistic to believe that Bitcoin still didn't hit bottom. But I think that after it will hit bottom, sometime something around maybe 14, maybe 12. Again, if I think it will be quite realistic to imagine that we will see Bitcoin in the next cycle when the Federal Reserve will have to reduce interest rate and have to go back to printing money, as we said in the fundamentals. There's no other option. Again, unless we will go to a financial disaster and then hear what Bill Miller said, it comes in. But if not, we hope not that this will not happen. Bitcoin can again perform like it performed in the last 3 cycles, and if it will do so, it will definitely be the most interesting and the most not only interesting, but the financial asset that has such a huge asymmetric between downside and upside, more than any other, or more than almost any other asset in the marketplace. Now, we are not recommending here to buy Bitcoin. I'm not recommending not to buy Bitcoin. Financial decisions and investment is a personal thing. Should it be 1% of your assets or 25% of your assets? How old are you? What's your financial stability? All of that is something that comes into the play when we do financial advice, and we are not doing here financial advice. But if you want to join our mailing list, and we will talk in the mailing list about signals, about when is the good time we feel based upon different algorithms we have, when do we feel is a good time to buy, when do we feel is a good time to sell, when do we feel it's below the cycle lines and so forth. You're most welcome to join our mailing list. You can see here the details. Join our newsletter. It's free of charge, and I'll be happy to give you a copy, a PDF copy of my book. The book came out in 2014. When I started to become aware of Bitcoin, but it's still valid, at least on the fundamentals today. So I think we have 1 minute to go. And just say again, this is not a financial advice to buy or invest and so forth, but I think we have 1 minute to go. If we have any questions there.
Hello, Hanan. Yes, we do. Thank you so much. Do you think that if the US government comes out with a CBDC, the government will outlaw Bitcoin?
So it's a very good question. I'm not sure we can answer it in 48 seconds. First of all, I think that from the perspective of outlawing the Bitcoin, I think it's too late. The U.S. government, I think, missed the boat on this one. If 60% of the millennials hold Bitcoin, I don't think that the government will want to get into a clash and confiscate the assets of such a big voting bloc. Millennials today are the biggest voting bloc. I think this is, they will maybe regulate parts of it, but I don't think they will outlaw it. The CBDC, it's a different story. If it will happen, I think it's a disaster. If it will happen for freedom and for privacy and so forth, and I don't feel too confident it will happen, but I don't think that that will harm Bitcoin.
All right, thank you. And I do have a gentleman asking about getting a free, how to request your book. Is it the email address that you have here on your slide?
Yes, exactly. If you send me an email, I'll send you a PDF of the book free of charge.
All right, and that's fund@pabcfund.com, correct?
Yeah, Palo Alto blockchain fund.com.
All right, and listen, I think we have time to squeeze this one last question that just came into the chat room. Due to the high interest burden of US debt, do you think the Fed will reduce interest rates? And what do you think the rates will be after this cycle ends? Any thoughts?
Okay, so I think the dream of the Fed is, if you can say, shock and awe of fast and fury, basically to have a very sharp recession that will reduce prices quickly, prices of assets, prices of increase unemployment, and bring the market like in a year and a half to a situation that they can start a new cycle. I think that's the goal, because prolonging it can really break some things fundamentally. I think they hope that if it will be fat, again, my personal feeling and assumptions, I have no inside information, unfortunately, with the Fed. But I think that the only way for them to keep this thing together and not breaking is really to do a quick and aggressive stop and bring a quick and aggressive recession, reduce price of assets significantly, and then everything can start for another cycle. Because otherwise, as I said, there's no way not to print. And I think then we'll see the balance sheet of the Fed cross 20 trillion.
Okay, Hanan, thank you so much. We have run out of time. We so appreciate you being here today, and thank you for that wonderful presentation.
Thank you very much.